Hi, this is jeng, and today I'm going to be talking about the DFW update for the second quarter of 2020. So I wanted to jump right in and talk about sales and how that compares year over year and then quarter over quarter. So here's just a high level snapshot of sort of where price per unit is coming in historically, right? So if you can look back all the way to, let's say, 2011, 2012, on average, it was 60,000 per unit across all asset types and all asset quality. And from there, it's grown almost double all the way to close to 120,000 per unit. And we have not really seen a retreat from that in sort of your upper mid-range, lower mid-range, and upper workforce, which is really your BNC product. We're seeing a pullback on the discretionary piece on that's really like your class A properties. We're seeing a pullback on pricing similar to what we saw sort of at the top of 2007. So we saw 2007 is about 134,000 per unit on average, and it dropped down to 110. So I don't know if we're going to see that dramatic of a pullback, but it's already starting to drop down now. As we're going to get into this, you're going to see that a majority of the concessions are coming from those Class A properties in lease up right now. So Q1 versus Q2, I mean, in Q1, we had close to 97 properties sold in DFW, close to 24,000 units. In Q2, I mean, COVID hit at the end of Q1. Essentially, the only deals that closed in Q2 were really deals that were already under contract. A lot of those deals fell out, and then some sort of pushed their way to the finish line, either with sellers giving concessions or buyers really wanting to buy those properties. And so we only had 18 properties sell in Q2, totaling about 3,275 units. And so we're going to dig into those 18 properties a little bit here on the next slide because there were so few. Let's just go through them and see them in detail. And so here I just sort of listed them, sort of starting with the discretionary all the way down to sort of your workforce housing. So you can see on the top side, I mean, some of these top end discretionary properties, they were going for anywhere from 160,000 a unit all the way up to 230,000 a unit. And so most of those properties were stabilized. They had rents in the $1.75 to $2 a foot in rents. And so these are properties that were built, let's say, in the last 5 years or so. So typically these are going to be your 3-4 story wrap type of properties. And then as you go on to sort of the next section down, you really get into more of your class B properties, right? So Kenny Wolf, he bought a property over near Lake Louisville. That property was a loan assumption. Madera, which owns a lot of properties here in Dallas, bought a property over in sort of Haltom City area. So the rents you can see after you drop down from sort of your class A to your class B, most of these rents are anywhere from $1 to $1.25 in rents. Another one, this Spring Creek, this was bought by a group out of California called the Paskin Group, and they put together a 1031 tenant in common to buy that property. And I'm trying to see if if you go down a little bit further, some of these properties, a lot of these deals got done because they were a loan assumption. So on loan assumptions, remember, there wasn't any sort of COVID-19 reserves that needed to be put up at close with the lender. You could just do a straight loan assumption, bring a little bit more equity, and close the deal. Down here, I would say these three right here that were sold by Revens. So Revens was a Japanese company. They came in, they tried to buy properties that were a little bit more infill, slice them up into condos and sell them individually to Japanese investors. And they took sort of high leverage bridge loans on those deals. And, once the occupancy dropped and you couldn't really manage those properties, they became a problem. And so that was a larger portfolio that was sold to a group, I believe out of California, that came in and bought those properties. And you can see some of these other ones, Regency Oaks, that was a loan assumption. And then trying to see if there's anything else. But majority of these deals, I mean, the number of deals on the market in the second quarter was just very low just because of COVID. These are some of the deals that have just come on the market probably in the last, I would say, 2 to 3 weeks. So people, they've seen collections get better in, so April, May, June. And so now sellers are pushing deals that maybe were on the market and now they're putting back on the market. So you can see that sort of your class B stuff is really sort of still around that 125 a door. And then some of these, the Destino is sort of probably A- deal in Grand Prairie, and that one's closer to 147 a door. So depending on the rents, I mean, you can see average rents are about 800 to 900, getting up to $1,000 per unit, and the rents range anywhere from $1 to $1.25 on average. And so these deals are on the market right now. So it's an encouraging sign to see deals coming back on the market. Pricing is probably down maybe 5% from it was originally listed, let's say in January or February. It's down maybe 5%, if even. And so they're going to take these back out. And, most of these deals we've already sized up the debt for. Occupancy is doing well. Collections are doing well. So most of these deals are going to qualify Fannie, Freddie, just straight out of the gate. So in terms of inventory, I thought this was a good slide just to talk about, the number of properties in DFW, close to 3,300 properties, 760,000 units. And right now in 2020, we're going to have probably close to about 35,000 units completed this year. So that's a lot of new construction. And, that's about 4.5%, 5% of the total inventory stock. You probably want to see 2 to 3%. Just on average. So hopefully that number comes down sort of in 21, 22, with sort of the lack of new construction probably right now in terms of new deals sort of getting penciled in terms of the lack of financing. So hopefully that calms down. But right now we're having to deal with the completions that we're getting right now. So this sort of shows a snapshot of all of DFW and sort of where the deliveries are coming. So in the green, that's where you're seeing new development. So I'm up here sort of in the top half in Frisco, ton of new apartments coming online there. So you can see, I think this is like in the last 5 years, how much the supply has grown. So Frisco has grown 69% in terms of its supply. Plano's grown just 45%. Uptowns continue to grow 40% supply growth. And so these are really impacting your Class A rent growth numbers, right? Because if these guys are coming online, it's just very difficult to lease up. I mean, Irving, that's actually pretty interesting. If you look at the sort of Irving submarket, they're not seeing a lot of new supply growth. I think probably just because a lot of that is B and C product that they're seeing there. But Fort Worth, downtown Fort Worth, uptown, they're seeing a lot of new supply, and then sort of up in Frisco overall. So that's going to impact your rent growth, right? So if you look at historical rent growth, I pulled it back all the way until sort of 2006, 2007 to see sort of the long-term trajectory. And you can see that, your discretionary is only grown about 40% sort of from the peak all the way to now. And then, B and C has definitely grown, closer to that 50 to 60% range. But if you sort of narrow that scope in and say, all right, what about the last 12 months? What are we seeing? Definitely see that top end drop from 1609 to down to 1590. But you see the upper and lower mid range with sort of your B and C products, they pretty much flat, and then the lower end still getting about $30 bump in rents. And so I'm still seeing that across properties that I'm invested in, is that they're not really able to push a ton of rent movement right now, just because of where we are. And so that's sort of an update on Q2. My background, born and raised in Houston, went to school in Austin at UT, and I was a loan underwriter at G Capital, and then also originated close to $800 million as a mortgage broker the last 5 years, and invested in properties across DFW, Austin, San Antonio as a limited partner. So definitely reach out to me. If you like this channel, definitely subscribe and like the video. And if you need help with a term sheet, maybe a deal that's coming up, whether to get a loan quote or if you just want me to review a deal, send it over to me, send me the investment package. I'll take a look at it and give you my thoughts, and we can set up some time to talk from there. Thanks a lot, guys.